Good morning, everyone. Good evening, good afternoon. As I say, wherever you are in the world, it is Monday, the 15th of June. We're halfway through the 6th month of the year. We have an agreement, apparently, between Iran and the US. Trump was trailing this late last night. Hegseth was also trailing it on the news programs on Sunday in the United States. We'll see what the details brings us, but the markets have reacted quite as you might expect. This is Bitcoin next to me here. We are back over the key $65 level, and we're at 65,800 this morning. Strong start on the back of that news. Remember, Bitcoin's available to trade all weekend, so the news broke late last night, and as the 10 o'clock candle completed, we were back over the 65,000 level. So watch that for the rest of the week. Can we hold that as the dollar has obviously weakened? And we'll just put our high of the day in whilst we're here for now for Bitcoin. Obviously, the major mover has been the energy markets, and particularly the oil markets. Brent is at 84 and WTI at $80. So we're down well over 4% this morning, gapped on open as you might have expected, under the $85 handle. So again, like with Bitcoin and 65,000, $85 a key level. If we just look at the daily time frame, big move down last week on the chatter of this deal, particularly on Thursday, and gapped between 90 and 85 so far. So that still may be a channel as we go forward. $80 the 1st of March, 73.28 on that Thursday night before the Israelis attacked Tehran, killing the supreme leader on that Friday the 27th, the night of the attack. So the 200 day moving average here for Brent is around about that $80 level. So watch that level as we go forward as well if this peace deal holds. Remember the chatter before the attack, the talk of the attack was all about global oversupply of oil and weak oil markets heading down to $60 itself on oil, weren't we? So as I say, watch what happens in the second half of the year if this deal holds. What the Israelis are going to do? The Israelis actually fired on Lebanon on Sunday as the deal was being announced. Netanyahu's been called a difficult man to deal with from Trump, but whether that's an agreed sort of stance between the pair of them, only time will tell. And even then, we might not find out. But oil down 4% and under the key $85 handle for Brent, and WTI, the one they talk about most in America, is obviously that key $80 level. But you can see $70, and we were down here at 60 something pre-attack. There's the red line. 67.40 was the 27th of February close for WTI on our derivative chart here. Elsewhere, as I say, gold is stronger. 4,300 has been recovered for the first time in nearly a week. And we're back, still shy of our regaining all our 26, where we started 2026 at the moment. 24,320 is where we started 2026, but we're up on Thursday, Friday, and again this morning. That's gold's bid. Silver also back over $70 an ounce. Forex dollar is weaker, as you might expect. Here's the dollar. Dollar's weaker, as you might expect, but the key yen rate remains heavily, well, not heavily, but over the 160 level. We came down on Thursday, repeated the break of 160 on Friday, and we still hold that. Obviously, we got later this week, remember, we've got the Bank of Japan, the RBA, the Swiss National Bank, and the Bank of England, all with rate announcements, and obviously in the Fed also on Wednesday. Let me just make myself a little bit small. You can't see the charts I'm talking about. So, guys, good morning, good afternoon. I say anything you'd like to look at in particular, let me know. There's lots of pips on offer, points on offer this morning. We'll have a look at our trading systems in a minute. So sterling, 134.40, euro back over 116. Here, the euro covered Thursday, Friday. So we're back over that big sell-off we had on Friday the 5th. And we're back to 116 in the key, 61.8. So that shakeout has been retracted, recovered. But obviously, as you said on Friday, we said all last week, big resistance at the 200 and the 50 conversion, and the top of the Bollinger Band there at 116.80. It's big thick resistance for euro to the upside, but better end of the week last week, and the dollar continuing to weakening today. Hello, sir. Stream us early. I don't know what you mean, my friend. Stream US early. Yes, sorry, I am early. Yes, it's for that. We're going to trade the European Open. AP. I've got lots of other things to do today, so we are trading the Open. Not a great deal of news today. There's a speech from Miss Lagarde addressing the ECB, I think, in about an hour. But excuse me. Say not a lot going on. But obviously, markets are moving quite nice. The dollar's weaker. So what we're going to look at this morning is the indices and anything else. AP, we'll have a look at gold if you're interested, obviously, as you're here. But normally it's the DAX and the FTSE at this time. We've got 15 minutes to the open, so let's just do what we normally do. So again, gapping on open. On pre-market high so far is over that key 25,000 for the DAX, and our pre-market low. We had a good, whoops, don't want to grab that, I want to grab that one. Pre-market low is around about there. So let's just zoom in. So we are positive. We're over 25,000. So we'll be looking to, go with the trend, which is taking long positions even on our 5-minute time frame. But we may see some key mean reversion of the gap we've seen on open this morning. So that's our low. That's why we gapped on open to 24,900 through the 200 period here on the 5-minute, and our high was around about 1:30 this morning, which we've just retaken. Interestingly, I'll just put that there. We've just retaken and then reversed. So this strategy hasn't yet reversed. It's looking to reverse, but remember, we're right on the open, so be careful trying to grab too much out of that one, potentially on a mean reverting strategy. But that's looking to revert. There's this touch of the outside of the Bollinger Band. We've gone up, but the stochastics have yet to cross. Okay, so we had a nice move there earlier. There's the touch of the outside of the Bollinger Band. First is there at 6 o'clock, 5 past, 10 past, 15 minutes past, and it wasn't till 20 past there, 6:20. You can see where the short has come in our 5-minute time frame, and that one actually played out. So the stop, if you'd had your stop loss up to the high of the day, which would have been up there from 1:30, so our stop loss would have been up there initially. Then we moved down quite nice, right to the bottom. So target 1, target 2, then it reverses again there. So we'd have got long. This has just gone long actually there. If you're going to trade this, I wouldn't have traded. Well, it's a big gold candle. It's a strong upside. So we're back with the trend. Got to sort of taken some out on the high as it's reversed. So that's still long, basically. I know I was saying it should be looking to go short, but we'll see what happens. So that is long still, with probably half of the position still open, and the stop loss around about, let's say the we'll have it here, just between the 50 and the 20 period moving average on that one. That would be still long there, but let's see how the open moves. The market should be positive, so this mean reverting may not play out. So if we just look at our let's just put that on there, fine, whatever. So our mean reverting strategy, our stop loss would be around about here now, and that bit bigger so you can see it. Anyway, our stop loss is there, and we'd have got in here. So still top out the money, but I'd have probably taken some off as it's reversed, to be honest. So I'd have flat, and I've probably only got 50% of the risk on at the moment, with probably flat trade, no profit on that yet. But we'll see how that takes out, and that might just stop us out. Still, we get some direction after the open. So that's our low there. Let's be 25,900 high, 25,087. So we're over the 25,000 level. And you see that's provided support at 10 past 7, and again there at 3 o'clock this morning, and at 5 o'clock this morning. So once, twice, triple bottom, but sideways, moving up. have we got any more legs in the DAX? There's no news to really move the DAX today, other than obviously the big geopolitical news of what's gone on. So see how that plays out for the rest of the day. Excuse me, it's 10 to 8. Or 12 minutes to 8. So let's see how we do for the rest of this session. Where are we? There we are. So that's up FTSE. So I don't normally trade the FTSE because of the spread, but that's nicely still trending long. I was going to look at the long position, trending strategy. So there's the moving average strategy. So that's been long. It's been chopping around quite badly. So been knocked out. But that's on the moving average strategy. That is also long from there. These would have been long, stopped out, short, stopped out on that reverse. That's a losing trade. That's a winning trade so far, but it's come back to test the 9 period. It hasn't moved under it. So that's still long, but sort of out the money. And again, the stop loss would have initially been down there. It's probably halfway between these at the moment. So that plays out with regard to the sorry, let's put the volume on because we're going into the open. How that plays out with regard the open and the 9 period. I wouldn't be using the 9 period at the moment. The ATR is around at 19 points. So I'll be looking for about. In fact, when I got in, it was 18. So 18 times 2 is 34. So 25 points. So we got in. So 70 roundabout would be initial target on this one. May have already ticked. It may have taken some out on that already. Used 1.5 times the ATR. Don't be too careful. Don't jump in to go against the trend straight away, because it's very much, as I say, the higher time frames. It very much with the it's to the upside. There's the gap you want to be watching if you're looking at that. But let's look at. I know oil. DAX is the one, so let's just go. In fact, that is DAX, isn't it, on the trending strategy? So there's that. Let's just go back to our mean reverting strategy, see what that's suggesting. So that's still, see, it's moving higher, and we're still yet to cross. Sorry, this is the. Is this the foot? No, this is the FTSE. Sorry, the FTSE still moving higher, so and looking to go short, but it hasn't triggered. This has triggered whilst we've been away. The DAX has triggered short, but there's the trigger. I'd be looking to go short potentially on our close mark. Remember, we're long still this one, so I'm going to ignore that signal to go short as we are right 10 minutes before the open. And see if we get stopped out on our short and then look to enter a short. Sorry, get stopped out on our long. So we're still long, but only half a position on the DAX. With our mean reverting strategy, the FTSE is long, okay, and that's been long from here. You can see there we go. Off it goes. Some taken out on that candle there as it hits the outside of the bottom, and now it's looking to go short as well. So watch that one. But again, we want a completion of this candle. We want a clean bit of fresh air between the orange and the blue line. Remember the stochastic lines. Remember the stochastics on this strategy a bit smoothed out than more smoother than normal stochastic setups. They're 10, 6, and 3, and we look for a touch of the outside of the Bollinger Band, whether it's the lower Bollinger Band or the upper Bollinger Band. It's the upper Bollinger Band across of the stochastics generates a short. The lower Bollinger Band across of the stochastics and a touch of the outside of the Bollinger Band. First, we touch the outside of the Bollinger Band, then we wait for a cross of the stochastics. We would go long. So this is waiting to go short if indeed it plays out. But as I said, if we look at the trending strategy, let's look at a different one. Let's look at the VWAP, which smooths everything out quite nicely because we're using Heikin Ashi candles. That has been nicely strong from quarter past 7, and now it's run out and it's closed out the long, and it's not doing anything. It's not sure what to do at the moment. So that is suggesting a bit of indecision at this level at 25,065 on the DAX, and the same I would guess for the FTSE. No, see, the FTSE is still long, so this is more biased to the upside. The body of the candle is smaller on our current candle, but that isn't complete yet. We've still got, we still just started that one. Still got 2 minutes to complete. But you can see this is a strong move. You got short there, out there. I would have got in there at 5 minutes past 7 as the last move here on the FTSE. There you can see no wick on that particular candle there. Still green, green, green. Added it here at 25 past. Possibly added a couple of times as well on those with those big body candles. That's the FTSE is more positive than the DAX, is what the Heikin Ashi candles are telling us, because the DAX has already gone red, and it's undecided what to do since this strong move up, also from 7:15. Okay, so be careful not to try and jump in too early. Wait till the system triggers. Remember that even our mean reverting strategy, AP, is still long. Remember what we did? We talked about the DAX is still long now. That has gone red now and moving down. We've got a clean cross, but it's not yet complete. Another minute, but obviously we're a minute closer to the open. So watch that volatility. So that looks like that's going to get stopped out for a flat trade. But we'll see if we test it. I mean, we are very close to the market high. We're much closer to the high than the low. So, and we're significantly above the 25,000. So this could easily continue to move higher as the cash session opens. Remember what the cash session is? It's it's the real trades, it's the real positions that brokers, investors, retail traders, businesses, family banks, family offices, all the trades they want to place, they've thought about placing since the market closed on Friday. They haven't been able to reinvest in some of that SpaceX money from some people potentially, cashing out their SpaceX when they open later on this afternoon. We'll see. Remember, 19% gain SpaceX maintained. I was looking at some data over the weekend, and the average of the first day pop, i.e. how much a new IPO moved in 2025 in the United States, this is just for the United States, was 29%. So in a sense, SpaceX underperformed, but it is a monster. It's much, much bigger than anything else the market's ever seen in history. Huge $1 trillion assets being floated on the Nasdaq. So a 29% was the average one-day gain for IPOs, and obviously the weeks and the months thereafter, different companies performed differently. Some gone on to accrue even more. Many went the other way. So a 19% gain overall is underperforming the average for 2025. So put that in your pipe and smoke it, as they say. But many multimillionaires, early SpaceX investors as of Friday, at least on paper, if they hold on. Strong close on Friday, obviously on the back of that. Let me just show you while we're waiting for that to complete, because we're not. So we're still long this. The FTSE is still long. Is that the yes? Yeah, there you go. The FTSE. So the FTSE is looking to go short at the moment. As we go into the open, it's not yet completed. If this remains like this here, right ahead of the open, we may be looking to take a short on the FTSE. But bear in mind, stop loss will be nice and tight around about there. And again, it might be a bit too tight for the open, but the candle's turning green again. So let's see how that looks. DAX, say still long. So see what volumes look like. Can we click the volume page on there? The volume ticked up there, interestingly. So we're expecting a bit more volume to come with the DAX, but that has rolled over. In fact, hasn't it? That's cleanly rolled over. So there might be. So my long, I mean, this sounds a bit odd. My long is still open, but the system would have automatically generated a short at this point here as well. So I've got. Doesn't mean it's not hedging. It's just the way the strategy triggers, because the strategy triggers when the rules are filled, and the rule was filled there at 750. So that has gone short, even though we're still long. That's the stop loss. So the long might get stopped out, and the short stop loss will be up at the market high. So you say you can't lose. Of course we can lose. it can whipsaw around, and we can lose on both trades. But that has now gone short on the DAX, probably ahead of the FTSE, because that candle won't have completed yet. That's still yet to complete. 55. Oh yeah, hang on a minute. That's not clean enough. We need to wait right until the open before that one completes. So, and that would have been long like the from before, but it would have closed out as it's hit the outside of the Bollinger Band there. So let's just focus on a DAX, which is the one we focus on more than the FTSE, to be honest. But so there's that's trading for you. Not getting too hung up on a particular decision. Follow what the system works overall. At the end of the week, end of the month, it tends to make money, not lose money. Obviously, it does have losing weeks and months and days. But overall, over thousands of trades, it overall makes money. So that has triggered short, even though I say manually I'd still been long the DAX into the open. Let's just leave that. We've had a look at that enough, haven't we? Let's have a look at gold, see what interesting in AP. Well, that is flat. That's had its go over the 4320, and it's come back down. So that's really not doing very much. You can see the volumes. Well, it's not really volume, but there's the low of the day, right on the 200 period here on our 5 minutes. So that's a key indicator. That's our low of the day at the moment. And that's gone short down here, or short from up here. And it's triggered long, didn't work out there. It's triggered long finally there. So that's gold is long on a mean reverting strategy from there, from 740. AP using this strategy, and first target is getting very close, but it hasn't moved. See how it hasn't moved in any momentum particularly. It's triggered long there, and the stochastics have moved off quite strongly, but the price action hasn't. So that's suggesting that there isn't momentum for carrying this forward. If we look at a trend following strategy, let's look at a different one for super trend. Remember what the super trend is? It is what it says it is. The higher time frame trend. That's still low. That's been long. Then it went short. That's still long. That went long there at quarter past. But as you can see, it's out of the money. It's under the 50. Is that the 50 period? Yeah, that's the 50. No, it's the 21 EMA, the blue line. So again, very flat line. It's not really trending. Hang on, it's DAX, not gold. Sorry, ignore what I've just said. Sorry. That is short. So there we go. That is short, and that's still short. And again, your stop loss either there or probably the 21 EMA. So that's still short. The trending strategy, remember, the mean reverting. The MACD is looking to cross down here, although we don't actually use the MACD with this strategy, to be honest. But that's suggesting that may be looking to go long, as with our trend mean reverting strategy. So the mean reverting strategy is front running the trending strategy by the looks of things there on gold. So gold is long from 740, but it's a bit of a weak one. We'd like to see it punch to first target and through the 20 period. So just watch. It's too late to get in now. I'm saying get that, although the price is the same. We are 1, 2, 3, 4 candles after the signal. So although you'd be filled around about the same price, what I'm saying is it hasn't had the momentum. See, the body of the candle is much weaker than the ones as we were moving down. So this may be our current European market floor, just above 4,300, which makes sense. And there's 4,300 just below there. And we're at 4,306 at the moment. So long, but not a massive risk position, simply because it's a weak. You can see it's been a weak move since that initial target. So we are 2 minutes past 8. The markets are opening as I speak. My Bloomberg feed is down, I think. It's my internet. Try the internet connection. YouTube connection is down at the moment. Might be taking that away as a free feed, but CNBC's open. And as I say, let me just show you how we closed Friday in the United States. All positive, green across the board. We were up 0.66 of 1% over a very volatile week, but we were up 37 points, 0.5% on the S&P. Again, the Dow outperforming, up 350, and the Nasdaq splitting the difference. Actually, the weakest of the three, which is interesting, up 80 points, 0.3 of 1%. Trading opens there 2:30 my time in 5-6 hours. Obviously, lots of news over the weekend. The Knicks winning the NBA for the first time in many years. The US winning impressively at the Football World Cup. Netherlands. Netherlands, Japan played a really interesting game last night. I don't know if any of you saw it, but that was a good, hard fought 2-2 draw. Second half much better than the first half. Anyway, where are we? That's what am I looking at now? There's all this charts in it. So gold remains long, but it's weakening now. Let's have a look at our trades, our DAX. Remember, we'd covered ourselves for the DAX. So our long would have stopped us out. Sorry, our short. Oh, what am I talking about? There we go. So you can't lose. So our short on this has closed out. Our stop. Well, I've closed out because we've touched the. So we've lost on both those trades. Is what I was saying. So remember, the system triggered short there. This is the risk of trading before the open, which I tend not to. I don't watch World Cup. Oh, okay. AP. Not even. Are you a cricket fan? We got England, got New Zealand here for the summer. Or you're just not a sports fan, but the World Cup's very strange times for Asian viewers. But anyway, we were long, weren't we? But we got our stop loss. We got our stop loss a bit too tight for the open, so we've been taken out of our long, and on our short that triggered there. Our stop loss would have been round about the high of the pre-market high, which we thought was a bit tight as well. So that's stopped out. So 2 losing trades there. We were flat on the first half. So the second half has been a loser on the long, and the short was also was also stopped up. What I'm going to do, I'm going to buy this now because we're now back with the trend. Okay, so just to say we do some live trading. People complain saying I'm not actually trading live. So we've taken a long position here with the fact 2 things. Once we have rejected the initial move short, and 2, we're with the trend. The trend has very much up. So I'm going to switch to the trending strategy, which one haven't we looked at? We haven't looked at. Let's have a look at let's look at the MACD and the SAR. That probably hasn't already triggered yet. That's still short, but we've gone long. Let's have a look on the DAX, haven't we? So let's use the crossing EMA because it's probably still long. There we are. So the crossing EMA, that's where we got filled up here at where was it? 25.91, and we're at 25.66. So we're out of the money 20 cents at the moment. As we come down, but we're happy to take that long. We're above the 20. Move that up a bit. There we are. There's the initial volume for. Is this the right? Make sure. Yeah, this is still DAX. So we've caught the top of the market, but so be it. That's what happened. So this is still. In fact, if you, I say, the volatility of the open would have stopped you out there on that 5 minute. But I'm happy to have gone long with that. Well, with the trend, we'll see what happens. With new highs for the day, maybe too much. Will we get to 25,100? That might be an area to have a look at here. So again, let's have a look how we do this one. So here we got a 22 ATR. So what this is telling me is the volatility, the momentum is increasing. So 22 and a half points. Let's call it 22 points is a typical move on the 5-minute candles here. So if we've got filled at, which we did at 91, 20 to 30 plus is 1.5 the ATR. So 40 points on that would take us to around about, what would that take us? 25,100 and 30, 40 areas. So we'll be looking for a target zone up here. Let's just put that. Let's put that on. So our initial target will be up here somewhere. Is our target area. So that's so there's the ATR at the time of our entry. In fact, let's just see what it is. So we got in on that trend. Let's call it, keep the math simple. There we are. 20. Let's call it 22. So 44, 2 times the ATR. So 44 plus 91 is 131, isn't it? It's a little bit lower than that. So 31, is that right? Yeah, 31. So 2 times the ATR is 31. So we'll take some of our profit if we get to, let me just put that in. 130. So for like a 40 point gain, if we get there. Our stop loss, on the other hand, is just below our, as we got in here, it'll be probably just, and it's fairly flat line, probably just below our, in fact, put it, the turn initially. So it's there, 25,005, split the difference, 25,005. So let's just put those figures in. So it's stop loss is 25,000 and about 35, I think it was, wasn't it? And 35, confirm, and our take profit, our initial take profit. In fact, we won't put the take profit in, but let's put the take profit in. So because it's only a small position. So where did I say the take profit was? 130. That's 2 times the ATR. Okay, so we'll just leave that. See what happens. That's our target. That's our stop loss down there. Let's put the stop loss in as well. It probably needs to be a bit lower, the stop loss, to be in all honesty, as we've just opened. Yeah, it needs to be 25,000. Let's make it. And 7, a bit lower, because that's the rules, the turn of the market, which is down there, where our stop loss is. There's the turn. We got in here, so it's, give it room to breathe, room to move down, and room to move up. So let's just move that. So there we are. That's the trending strategy as the open opens. Okay, so if we again go back to our mean reverting strategy. There we are. What's happening here? All right, because that's our long from our trending strategy. So this first short didn't work out. It's then gone long, stopped us out, and it's now looking to move short again. So let's see if that triggers a short as well. So we can have longs and shorts. So we saw before, we got stopped out on both of those. So the high is just a bit higher than it was. Obviously, the low is all the way down there still. So there wasn't the oomph at open, was there? Which is interesting. So the short, this mean reverting may play out as we move lower. See if the gold has moved on the European Open. Probably not a great deal, one would guess. It's ticked up. So that's quite positive for gold, because we've gone through the 20 period there. So that is moving up it's got to its first target, so that would have been a winner. We take 50% off there, 50% of that's closed, but you can see the stochastics are still moving higher, but the momentum has increased a little bit with the open, not as much, but there's big resistance there. That's the 50 period and the top of the Bollinger Band. So certainly if we get there, that'll be all closed. But this would have 50% of this trade is now closed. That would have been entry there. The green. The stop loss now is probably right on. Stop loss is also right on the entry, and take profit is being taken. So it's a few dollars on that first trade, and I'll move the stop loss up a bit above entry, just shy of the bit too tight, in all honesty, on the 5-minute trend there. But it's demonstration, but we haven't actually got real deal, have we, there? But you can see the stochastic moved up quite quickly, so this might peter out. It may have the muscle, the momentum to get to the outside of the Bollinger Band, but we'll see. So that's half. That's actually a winning trade. Would have been a winning trade. The FTSE was trending long, wasn't it? So again, if we'd got that stop loss too tight, but that's turned over quite positively, hasn't it? It's created a bit of a tweezer top. It's not an exact tweezer top because the wick is high. So that's our high on the FTSE. That's a cleaner short. So that would have triggered a short on the FTSE. Let's check it's FTSE. Yeah, so that would have triggered a short on the FTSE on open, basically. In the first 5 minutes, it's triggered short from there. And again, it's a cleaner and a nicer entry. Obviously, it could reverse, but we got the volume on the candle, so the stop loss isn't there. The stop loss is above the high of the day, which is just above that wick there. Our entry is the close of that candle there. Because we're right on the first target, which is normally the midpoint of the Bollinger Band, I wouldn't have closed any of that out. So that's our entry. That's our stop loss. Our target, I might take, it depends how quickly this moves down. We've gone in to test the 50 already, but first target really should be the bottom of the Bollinger Band, but that looks like a bit of a step down, doesn't it? If we are, the short is going to play out. Remember, we're against the trend, so risk would be quite small. The volume we trade on this quite short. This is a buy. You see, it's the short, the long on the DAX isn't playing out. It's still long. Remember, we got it, but we bought right at the top, didn't we? So this has moved down quite nicely, but that might be the entirety of the selling for this first 15 minutes or so from the FTSE to the downside. Okay, the first 15 minutes is just about up. So let's just do what we do with our 1 minute time frames, where we just look at the cleanness of the 1 minute charts. We mark our high of the day of the open and the low of the open. So interestingly, that's gone into the 200 period on the 1 minute. So that's providing nice support. So it's rallied from there. So that do. We on the 1 minute chart, we're now looking to play, send some orders in, some pending orders in. So we'd be short if we broke that 200 minute moving average at 10.543. So I'd put some orders in to go short on the FTSE at 10.543, or long if we break the current high of the day, which is 10.569. So that's how the 1 minute system will be set up following the first 15 minutes of the open. The DAX will be a similar sort of setup, I'm guessing. There's the high. So in fact, I would have had longs through here. So there's the 8 o'clock, went all the way down there. So again, shorts below here, longs above here, and this is long, and we are long this, aren't we? But we got filled right at the top of the market. So this is with the 15-minute trend, if you like. But we got filled right on the top here on our 5 minute time frame. So that's how the first 15-minute, 1 minute trades are playing out. And again, the 1 minute is looking to go long. So pre-running our 5 minute, hopefully, to the upside. And our FTSE 1 minute mean reverting has gone the other way. Was long, and it's reversing at the moment. So that's the issue with trading with the 1 minute time frame. The move higher has been faded, and there's a volatility you can see on the 5 minute time frame on the FTSE. But the one we've got position in is the DAX, and that's looking also a bit weak, given that we call it the top of the market. But let's see how it plays out, because we weren't using this one, were we? It hasn't really reverted, has it? It's tried, it's failed. It's tried to go high, it's failed. It's trying to go short, it failed. It's trying to go long again. It's well, we'll see when it's withering out. We might just be out. So the strategy we had open that we took the long on was our mean reverting strategy. Sorry, our trending strategy on this candle here at 8 o'clock. Although we didn't take till later as we moved higher. So this is sort of moving into the money as the volumes sort of slow down a little bit after the first 15 minutes. But we're now moving higher. So might be time, may not be time, of course, to pull my stop loss up. But let's see how this candle finishes before we do that. Any questions? Anybody? AP, if you're still here, thank you. Ash, I don't know if you're here, my friend. What do you trade? Let me know, and we can trade it together. What time frame? Your setup? I can have a look at your setup, see how you're doing. Hope you're making money, because we're all here to help. These are very, very simple strategies I apply here. People say they're too simple, they're too old-fashioned, but they make money for me, and I'm quite happy. And I make most of my money on an end-of-day basis. Don't win every day, obviously. Don't win every week. But overall, we are in the money most months. And I've been doing it a long time, so I'm relatively relaxed about it all, to be honest. But because this is, as I say all the time, this is very much a mind game. Tomorrow, we'll be doing a webinar on one of my favourite setups. That's the Fibonacci indicators. So AP saying he's not trading detail. Okay, well, it's good to watch and learn. And there's nothing wrong with paper trading, AP. Obviously, it's a different mindset, because your subconscious knows that you're not using real money. But there's nothing wrong with a demo account or manual trading, writing stuff down, understanding a strategy that works for you. What's the right asset? Does gold move enough for me? Is it too volatile for me? Do I need to pick individual stocks? Find the thing that works for you. As I say, when I started, the telecoms business was booming. I was working for we were liberalising. The UK was liberalising its telecoms infrastructure. The internet hadn't taken off, but you could feel it in. And I was around lots of very clever guys. And the internet and the rollout of mobile phones is all taking place at the same time. Mobile phones in the mid-80s, and that's, I made a lot of money in lots of telecoms companies. They were the hot stocks at the time. We then moved on to the internet bubble by the end of the 90s, and it was all getting a bit mad, but not as mad as it is now, to be honest. But anyway, we're in a different era, aren't we? SpaceX, Musk can tittle off to Mars as far as I'm concerned, but the crazy mad genius that he is. But shame about his politics, but there we go. Yeah, so we're going to have a look at fibs, particularly the retracement, coalescence with multiple fib levels. It gets the charts can get a bit messy, but it's sort of reinforcing levels tomorrow. So we'll I can't remember what time it is tomorrow. It's tomorrow afternoon, I think. It might be your evening time, AP. I don't know where you are. I'm assuming you're in Asia somewhere. So yeah, anyway, that's for tomorrow. So let's have a quick look at the calendar. It's a busy old week. Obviously the markets have been not caught unawares. There was lots of warning of this deal coming, and Trump's been talking about it for weeks, hasn't he? But as far as economic data is concerned this week, a key week. So first up is the Bank of Japan, and probably for me the most interesting of the central banks this week. Particularly what Udir and the rest of his colleagues on the policy, the central committee, have to say about interest rates going forward. Remember, there's this dichotomy between the Prime Minister The Margaret Thatcher loving free marketeer new prime minister in Japan, and the cautiousness of the central bank of Japan. So interesting to see what they say. Will they actually go ahead and actually raise rates tomorrow? We shall see. Cut rates potentially as well. It's all sorts of in the mix, but expected some sort of move tomorrow. So obviously we got the yen very, very weak, 160, not against the dollar and against the euro, and sterling as well, also very, very weak. Also tomorrow morning, the RBA have already gone. Inflation was a bit cooler this month out of Australia, but 4.35%. It's hurting many mortgage holders in Australia. So I'll see what RBA have got to say tomorrow. And two very interesting press conferences. I would say the Bank of Japan one will be one I'll be watching early tomorrow morning. We'll do our Fibonacci webinar later on tomorrow. Wednesday kicks off with sterling's inflation area likely to back to the psychological 3% level. Remember, all central banks are looking for 2%. Core retail sales out of the US later on in the day, and Trump has a speech scheduled. I don't know, is that being held a press conference at the G7 meet? Oh yeah, that's right. The G7 meet this week as well. Trump's in Paris, not in Paris. It's not in Paris. Is it in Nice or somewhere? It's not in Paris, but Trump and the rest of the G7. Remember the G7, the 7 biggest industrialized countries from GDP. The Western ones. China's not there, obviously. Later, Wednesday, the event of the week, although it's a bit of a non-event, nothing's going to happen. It's really the press conference and how Kevin Walsh performs in front of the press. I mean, he's a very cool customer, obviously. But see what that goes, see if the projections have changed, see if he's got any first ideas about changing how the inflation is measured. He's got some very strong views about that. Now he's Fed chair, he's got ability to change things. So see what he puts down in his agenda there. So really interesting. We'll be live for that on Wednesday from 7 o'clock London time. That's 6 o'clock GMT, 1800 hours GMT on Wednesday. Thursday brings us UK jobs and earnings. They've been a bit spiky. Jobs have been a bit weak. We've also got the Swiss National Bank and the affects me personally is the MPC, the Bank of England, expect to leave rates as they are for the rest of the year now. Apparently, the chatter is. But as ever, the MPC, the Monetary Policy Committee, their discussions are very lively. Remember last time they were split 4-5 about moving rates. Much more unison's expected on Thursday. But again, really one interesting one to watch, the Bank of England's manoeuvre. And obviously, I've got particular skin in the game. Living in the UK, US claims also on Thursday, and we wrap the week up with the retail sales from the UK. So a key week as we move into the second half of June this week. So be with me for those if you can. AP, what are you saying about paper trading? I don't think paper trading works for me because the psychology isn't the same with live trading, or am I too new, maybe? No, that's fair comment. I mean, I started with paper trading. I started, literally, as we see here, pennies per share, basically. I was making pennies. Didn't make... The issue is, that's why you take out the money element out of it, AP. I mean, again, that is the psychology, because it's not real money. And the other thing about demo accounts is brokers, they tend to give you a ridiculous amount. They'll give you like $100,000 or a $50,000 account when you can really only afford $10,000 or $5,000 or something. Typical retail trade. So it's not real money. So you don't manage the risk the same. You don't think of the percentages. That's why I always say to people, think in percentages, regardless how big your account is. Think in percentages. So you want to be, losing, 1%, 2%, absolute maximum. 0.5% a trade, point whatever it is. 0.3, 0.2% per trade, 0.5% a day, 1% a day, that sort of thing. If you've got a real account, I only want to lose $100 a day of my, $10,000, whatever it is. Think in percentages rather than numbers. You're right, but it was a long time ago, obviously. But I used to have, I still do to an extent, A4 sheets of paper and write everything down. What I was doing, entry price, exit price, points made, points and pips made. It's very much points in the day. I was using the spread betting here in the UK, but it's still leverage. So you need to understand how leverage and margin works as well. But yeah, if you're saving up to open a real account, fair enough. But have a look at our. It's $9.50 our instant account AP. If you look at, if you go to our website, and there's always deals on. There's always offers on our website. So June 20 is a 20% off, 30% if you're new. I guess you've used this before, but they start from $9.50. So sorry, $9.99. See here, the Flex account, very, very popular because of the price. Basically, different platforms. I'm obviously using TradeLocker at the moment. The price is still the same, but you still get 100,000 for $9.99. I mean, if you want to be a bit more realistic, start the 5,000. It's still the same price. So people get pulled in to using a bigger account size, but it gives you more ability to take more trades and keep the risk the same. As you can see, the rules are quite tight with the PayFlex account, but you get that back once you've been successful 2 or 3 times. You can see the drawdown is targets are quite small, and the drawdown is relatively small as well at 6%. If you use a standard, say it's 2-step, you got a bigger drawdown and a slightly larger target. You got 5% and then 8% on the 2-step. But that's where we started. These 2 classic prop trade accounts. 0 is what it says. You don't have to have a target. You're straight in there, but the drawdown is quite tight, and it's instead of being $9.99, it's gets you started with $63, 20% off for a $5,000 account. So you can start from only $9.95, and it gets you back trading with real funds on real markets, and you test what sort of platform you want. C-Trade is great if you've got lots of technical input. I haven't used it very much, but I really liked it the few times I did use it. MT5 is obviously is the default. You get multiple accounts screens up at the same time. It's much better than TradeLocker from that point of view. But I'm happy with TradeLocker simply because it's a really good way of putting your risk management in. It's simpler, it's a bit more intuitive, I find, than MT5, even though MT5 has been going for decades. This bit of TradeLocker is the one that really gets me. Being able to put in your percentage risk is much slicker and tidier, and it tells you the lot size to use. You can do that with MT5, and you get little add-ons with MT5 as well. But this looks a bit more intuitive, a bit more 21st century than MT5, to be honest. But anyway, there we go. So are we actually in the money yet? No, we're just about piddling around where we are. So I'm going to wrap this up. I've been here an hour now. Unless you've got something else you want to add, AP, I'm going to wrap this up if that's okay. But yeah, concentrate on the psychology. I hope the trading in the zone is going well, and you managed to read some chapters over the weekend. Let me know how you get on with it. It really is opened my eyes significantly. And I say, if you've read that next one, as I said to you last week, this is an up-to-date one, but this works really well as well. You can't see me, can you? Best Loser Wins by Tom Hugard. That's available everywhere as well. Softback this one, so it's relatively cheap. But 2022, I think it's 2022. It's 2024. I haven't really published it. 2022 was this. It's a gold. I thought it was. But that's really good about again, talking a lot about psychology. But let me know how you get on with trading in the zone. So I'm going to leave you. We're still out of the money on the DAX, but we'll leave that long on. We'll leave our stop loss, leave our target, and we'll update you tomorrow how that finished or what happened there. I got bored with it and closed it out. Don't know why can't we see anything? It's still going to good. You know, the volatility. See the APR going. It's not just showing you the trend range, but there's more volume to the upside. So we are actually out the money at the moment, aren't we? Why is it suddenly gone like that? So, oh, there we are. It's a bit better. So we're out the money. I might be getting stopped out, but anyway, we'll see how that goes. Doesn't want to get beyond our entry, does it? Oh, there we are. We're moving down quite significantly now after half an hour. So let's see what's happening now. We've got this 30-minute time frame. Remember we said about the 5 and the, I can't remember, we didn't put it on here, did we? But it was if we got the 1 minute, it was the it was the 1 minute, it was 200. Oh, it wasn't on. It's a 200 period, wasn't it? Let's go to so this might be triggering a short on the 1 minute time frame. Something's obviously happened. The enthusiasm of the deal has waned in Germany by the looks of things. So where was the 200 period on the 1 minute? That's the 5 minute. So let's see if that. No, it's still not. No, it's still. Oh dear. There's 1 minute. So it's it might have no. That was the low, wasn't it? 15-minute low. It hasn't triggered that to go short yet, but it's looking that way, isn't it? So we're out the money 30 cents now, 30 points, which ain't great. 91 to 61 or 64 at the moment. Okay, I'll let you know how that gets on tomorrow. Thanks, AP. Thanks for your time. Thanks for being here. I hope you're learning something every day. I learn from you guys as well. Don't forget. So take care. Be good. Let's have a look at your the gold position. That was biased to the upside, wasn't it? And that's reversed. Oh, that's 5 minutes, not 10 minutes. It's yeah, so see what's happened there. We got to there's our long, there's target 1 and target 2, and we're out. That would have closed out, as I said, because we've got the 50 period. So that long is completely closed. Target 1 was here, target 2's here, and I've closed that out now. So that's out completely. So that's a winning gold long. May continue up, but that 50 period looks pretty strong. It's hit the outside the Bollinger Band and it's reversed, and you can see that's now reversed to go short actually. So that would be worth a short. So I'm going to put that on actually. That looked pretty neat. We'll see what happens. Big spread there on the gold, but we're short gold with a stop loss above. Let's do that in stop loss. 4.321, 4.3, just above the psychological profit target. 4.309. And I'm going to go off 4.309. Confirm. I'm going to go off and have some breakfast. Both out the money at the moment. But anyway, there's that little roll over on the DAX on the completion of that candle there. Okay, take care, everyone. Have a good day, AP, and you, my friend. I'll be watching football later. I know you won't, but I'll see you tomorrow for the Fibonacci setup.